Hello there, Pursuing Freedom friends. Thanks as always for tuning in. I'm glad you're here. I've got a unique episode for you today. So, we've always brought on guests that have had some success either in selling real estate or managing real estate companies or owning businesses, coaches, speakers, authors, trainers, anybody that can provide value to the real estate community. And one of the topics that we've never really dug our teeth into in depth is the money management piece. And I've noticed in the last couple years that when I get to the portion of our programs in my coaching programs where we focus on the concept of and then what, right? Like at first you're trying to figure out how do I find clients, close transactions, and pay my bills. And most of us get into this world of self-employment having no clue what we're actually capable of. We're just kind of hoping for the best and throwing stuff against the wall to see what sticks, winging it. And inevitably, we start to close transactions and we start to bring in that revenue. And far too few realtors and lenders that I've had the opportunity to work with have a plan for their money. And we're just winging it with the money piece. And so I've noticed that the light bulb starts to go off when we start talking about turning that active income into passive income, having strategy for your money so that you can have the peace of mind to know that you're truly running a business. You're not just a passenger on a train going off the rails. And so I wanted to bring on a friend of mine. Her name is Cheryl Heller, and she's the founder of Pillar One Consulting, and her business is essentially fractional CFO services. So she's basically a contracted chief financial officer for small businesses and startups, and really focuses on the strategic side of your money management. And I thought it would be interesting to have a conversation with her and give you guys some takeaways that you can start to implement right away, and or reach out to Cheryl on your own and maybe get connected with her and have her support in running the financial side of your business, because not all of us are savvy. And with Cheryl being a finance expert, I thought this would be a great topic. So with no further ado, Cheryl, thank you so much for joining us today.
Yeah, of course. Thanks for having me.
So tell us a little bit about your backstory and how you got into this lane, because I know you've been in the finance world for a long time. And how did you find your way into becoming a fractional CFO? And what does it look like for you to serve clients on a national level? And how do you support them behind the scenes in achieving their financial goals?
Yeah, absolutely. So I was in public accounting and financial services for 20 plus years, and I left about 6 years ago and kind of fell into the fractional CFO realm. So, always was around finances and operations in the companies that I worked with. And when I left, I had friends and colleagues that were doing startups or small businesses start to call me and say, "Hey, do you have some time? I'd really love your help." And that was, I think, before a fractional um, C-suite type folks really even existed on a deeper level. And so I didn't know what it was at the time. I just started doing consulting. And then it's grown sort of over the years, and have gotten to work with a lot of amazing companies doing a lot of different things from professional services, marketing and business development for other startups and small businesses, um, helping to provide a non-chemical way to keep our waterways clean, which is really interesting company, and in real estate companies as well, that are building modular units for hospitality. So, when I work with companies, I typically work with the CEO or the founding team and help them think about their strategy and where they want to take the business, and then back into what that means from a financial perspective. And so we'll look at their cash flow, we'll look at their revenue. A lot of them have raised money or in the process of raising money. And so we try and understand how long their current cash is going to last them, based on some of the strategic activities that they are working on in their business. And I think there's a lot of corollaries from that to the audience, Aaron, of your podcast with real estate agents and lenders, because if you're a small business or a startup and you get a big investment, you have a big chunk of cash at the beginning. So sort of like you get a big commission check, and then you have to make that last as long as possible in your business before you might get another infusion of investment or another commission check. And so understanding your cash flow and is super important. Understanding your break even, and then what we call runway. So runway is basically you take your monthly expenses and you divide that into how much cash is in the bank, and it tells you how many months that cash will last you for.
Okay, I love this language because we talk about this a lot in my coaching programs in regards to the break even and the runway. And I feel like a lot of the listeners are going to relate to how my journey was and how it changed, which was that early on, like I said before, I think so many of us are winging it. We don't know or even have a clue what we're capable of earning financially. And I believe that to be true at any stage of life, right? I heard Steve Jobs quote recently about you can't connect the dots forward, you can only connect the dots looking back. And so you get to where you are and you look back and you can see how your challenges and your successes led you to where you are right now. But it's hard to see where you have the potential to go. And so many of us are not great at planning because we don't maybe believe in our potential to have controllable cash flow. The real estate industry by nature has sort of a cyclical nature to it where there's good months and there's bad months. And I know for myself, when I had the good months, I was just grateful and maybe I'd found myself in debt and was happy to pay off the debt. And then I'd have the bad months and I'd panic and I'd need to go get more business. And I never really put myself in the driver's seat with my money until, well, eventually I had to when I started running my own branch and a P&L. And so I understood the break even piece because we figured out, okay, this is what our overhead is. These are our expenses, rent, marketing, employee, income, et cetera. And then this is how many transactions per month need to close with our average price point to break even. And that means anything above and beyond that is profit. So now we have very specific goals around the volume that needs to happen in order for us to be a profitable business. And I'm just curious, like, what happens if you are talking to someone who is in what we call the pre-revenue stage? Like they're maybe either at a crossroads because 2023 was a shift in the market and their revenue wasn't what it had been in the past, or maybe they're new to the business and they're thinking to themselves, well, I'm not in a position to think about managing my money because I'm in pre-revenue, I'm behind the eight ball. How do you address like the mindset piece there around it's still okay to have a plan? Does that make sense?
Mhm. Yeah, absolutely. And I think it's always important to have a plan, not just okay to have a plan, because what you want to be able to do is make sure that you're using the cash wisely when it starts to come in the door. And so forecasting out, and I would even say take your break even out for the whole year, right? Not just month by month, because then you can say, if I have a few good months at the beginning of the year, I know how much of that cash that I need to set aside to help carry me through what might be a little bit of slower time later in the year. And so, even if you are pre revenue, it's important just to know what you're spending on a monthly basis. And I find that sometimes people have this fear about looking at their bank account, looking at their spending, looking at their credit card bill. So they don't even know where they're spending their money. And if you keep an eye on where you're spending, you could find that there are things that are getting spent that you don't even need. If this happens to us all the time. Multiple people sign up for the same subscriptions in the business. And so then I find, that we've got, multiple, Zoom subscriptions or multiple Adobe subscriptions, and trying to pare that down and say, what is the most efficient way to manage our costs in the business is always something that you need to do, whether if you're making zero money or a lot of money, because it's just wasteful to spend money where you don't need to. So that's something that I think you can definitely look at even before you have revenue. And then if you are pre-revenue, there are things that you probably want to plan for going forward. So you can say, like, maybe there's another like certification or training class or something like that that you want to do, but you don't have the money for it now. Well, how much is that going to cost? And when do you think you're going to have the money for it? So let's put that in your forward cash plan, so that when the cash starts coming in, you'll have that already allocated to use on that item that you want to do to invest in yourself or invest in your business.
I love that. I love that you talk about the allocation because we've talked a lot about, let's say, for example, you did want to hire somebody and you just wanted to hire somebody part-time to take over your marketing, for example. And a lot of the things that we do from a marketing perspective can be handled and executed by somebody else. And if all the marketing were to happen with 100% consistency, we would likely most definitely see an increase in business. And so let's say that's a plan or a goal that you have, and it's going to cost you $1,500 a month, right? So I typically say we need 90 days to know if this is going to be a right fit. You're going to know within 90 days if this investment was worth your while, because consistent activity to results is about 90 days in our industry. So then I would say, okay, then I want to set aside $4,500 to buy myself that time, but also buy myself that profit. Honestly, I'm investing in the business ahead
Mhm.
of the profit because I believe that with improved consistency and systems, I'm going to have greater profits. So $4,500, okay, then the next time I have a closing and I have a $7,000 commission, 4,500 of that is going to go into a runway account called Buy Myself a Life,
Mhm.
and that way that you've got it set aside, that you've got the 3 months of salary for this person. Or you could even say, build that runway up until you've got $48,000 in it, and now you have an annual salary for a full-time team member. What is your perspective as you're supporting small business owners on the concept of investing ahead of profit when their belief system may not match their true potential? Does that make sense?
It does. And I think the really important thing here for me is the KPIs, so the key performance indicators that you're managing with the business. So if you spend that $1,500 a month to do your marketing, you're expecting some level of increased profit. And so it's really important to keep track of what, even once you're past that 90 days, like maybe for your first 6 months, are you getting the profit that you think that you're going to get from that increased marketing? And if not, maybe it's the wrong person. Maybe you're not marketing in the right channels, or maybe it just is not like hitting home with your ideal customer. And so you have to make some changes, but you'll never know that if you're not managing those key performance indicators. And I had a client a few years ago who they were spending $3,500 a month on this company that was supposed to be doing blog writing and managing their website and doing marketing outreach. And it went on for like 6 months. And I kept saying to them, there is no revenue to show. And they weren't managing the KPIs. They weren't managing this company to actually achieve the results that they had hired them to do. And so for me, advance investment is great as long as you know what your expectations are coming out of that investment, and you know how you're going to measure it, and you have the fortitude to change course if it's not working out how you thought it was going to work out. Because I think people get into relationships like that. They hire somebody and the person isn't working out, but then you feel bad, but then it's still costing you money, but you're not getting the benefit. So you don't want to hurt their feelings, or you don't want to let them go because that impacts them. And I understand, creating relationships and having empathy, but you're also there to manage a business. And so if it's not working for your business, you need to make sure that you have those metrics, because that makes it an easier conversation as well, to say, listen, we thought we were going to do X. That's not happening. So therefore, I can't pay you.
Interesting. Some of our listeners, probably a good majority of the listeners, are what we would refer to as a solopreneur at the moment. So they don't necessarily have support in place. And I'm a huge proponent of outsourcing because I think we become our own bottleneck because we're not gifted in all areas of life and business. And we try
Mhm.
to be great at everything and we can't be. And then we beat ourselves up and that creates a negative spiral. So I'm always encouraging people to look for those areas of tasks, relationships, things, that obligations that no longer serve them or that drain them energetically, and determine whether or not you need to either eliminate that, outsource it, or if you have to do it, batch it. And as someone like you who's been serving a lot of small businesses and not just solopreneurs, but business owners, what is your perspective on that? Because I think there's almost a fine line between there's a fear of investing in yourself and your business until you've earned the right. But you're bottlenecking yourself and getting to your true potential because you're trying to do it all. And so there's going to be a limit to how far you can go alone. So there's that piece, right? There's the fear of spending money to get my business to be profitable. But then there's the other side of it, which is I'm investing and I'm not monitoring KPIs, and money's leaving the system without me even realizing it, like leaks, like money leaks
Mhm.
in my life and business, right? So what is your take on that in terms of, do you believe a solopreneur can survive without eventually investing in their business in some capacity, whether it's in systems or people or technology or whatnot?
I think you can survive for a certain amount of time without that because you're really just kind of getting started. But if you really want to grow your business, if you really want to find that sort of freedom of time and freedom of space for yourself, then if you don't invest both in systems as well as in people, then you'll never get there. And it's scary when you're hiring your first hire, and I've had that sensation too in my business. Gosh, do I want to spend this money on a social media person or on a bookkeeper or whoever else I might need to help me? Because then it creates this burden of, well, now I'm going to always have to pay this person's salary, and what happens if my business doesn't go well, and then I won't be able to pay them. However, um, it's not going to go well if I still tried to do everything myself. And so I think you have to kind of consider the two options of what would happen if you didn't, and then what would happen if you did, and what are your longer term goals. Do you want to keep doing this, heads down slog and doing all the work yourself for years and years and years? Or do you want to create an environment where you can kind of pick your head up? You can think more strategically about the business. You can not do the things you don't like to do in the day to day, and actually focus on the things that you really like to do, that really kind of fill your cup from a intellectual curiosity perspective. And if you don't hire people, then you'll never get there. On the other hand, I have seen business owners who were really overzealous and really wanted to hire a huge team, and their business development and growth didn't keep up with the team. And so then it is a really tough place where you have to lay people off and right size the team. But that's why it's so important to make sure that you have these KPIs that you're measuring across your business. How is your business growing? How much cash do you have in the bank? What are the key priorities that you have for the next quarter that you need to achieve? Do you have the right people to achieve them? And if not, then let's figure out a plan to get them on board. But don't kind of get out over your skis. Don't, if you start hiring for a certain kind of person, you might find multiple people that kind of fit that bill, and you want to bring them all on at the same time. Well, that's not necessarily going to work. You have to kind of work your way into it and do it in a methodical manner.
I love everything that you said there. I resisted hiring for 8 years because of fear, and also because pride, right? My ego. Like, I don't want anybody to mess up my business. But if I look back during those years where I had figured out how to find clients and close deals and the money was coming in, but the fear was still deeply ingrained from a younger me, I was exhausted. I was burning out. I was running on fumes. I was a shell of myself. I was not actually doing the very best I could be. I wasn't. And I had this story in my mind that if I hired help, it was going to mess everything up. And in reality, I was already messing it all up, you know?
Mhm.
And the crazy thing is that with one right fit hire, the business more than doubled overnight. And there's no way I would have even wanted to do that amount of business by myself because it would have broken me. So,
Mhm.
so many people, they hit their personal capacity, they hit their plateau, and they can't figure out why they can't seem to get through this barrier of financial or business or growth or whatever. And it's simply because you're doing too much. You can't do it alone. And I genuinely believe that, I tell my students that sometimes we have to rewrite the narrative and say our clients deserve better. Our clients deserve someone who is energized and focused and present in all of the things that really matter with this major financial decision. And there's all these low dollar activities that are draining my energy and making me feel scattered and preoccupied. And I'm not showing up as my best because I'm over here trying to wear too many hats that aren't
Mhm.
really that important for me to wear, but they need to get done. So I love that perspective that you shared. One of the things you were talking about before we started recording and that you and I have discussed in the past is something I love and I want to just touch upon, which is, what's your advice when it comes to strategic relationships with the banking institutions that you use for your money?
Mhm. I think that's a really important relationship to continue to develop as a small business owner, whether you're a solopreneur or you have a whole team behind you, because you never know when that relationship is going to come in handy. So, there could be a time where you need to get into a new lease, or, you might even want to buy an office space for yourself, for your business. And your banker, your local banker, is going to probably be the one that can help you out the most. If you need an SBA loan, that local banker is going to be the one that shepherds you through that process, and they know, what they're talking about. They know how to get it done, and they can tell you, is this the right time, or if it's not the right time, what do you need to prepare? What do you need to be thinking about in order to be ready for that down the road? And then the other piece that's really important is making sure that you don't have all of your cash just sitting in an operating account. You want to make sure that you put that cash to use. And so the bank, your local banker, can help you with doing things like maybe creating a money market account. So the savings that we were talking about earlier, if you're sort of putting together a runway savings, so that you can hire somebody next year, and you're kind of socking away a little bit of money each month to do that. Well, maybe you have your bank help you open up a money market account, so that at least you're earning money on that cash as it's sitting in the bank, waiting for you to hire that person, so that it's not just sitting in this operating account doing nothing. I think as the business grows too, that's something important to keep in mind, is there are FDIC limits on the amount of money that is insured in your bank accounts. And so making sure that you understand those limits, where you might be butting up against them, and talk to your bank about strategies for managing that. So there's definitely a lot of ways that they can help you when you get to that threshold as well.
Okay, awesome. And one last question is, what's your perspective as it relates to paying yourself a fixed amount each month, even though your revenue is fluctuating from highs to lows and highs to lows? Like, do you set up a plan to figure out what your monthly lifestyle expense, lifestyle number is for you and yourself or your family or whatever, and then pay yourself that fixed amount to live off of, and then that create helps you to build that runway account?
Yeah, I think you could do it in a couple of different ways, and it all depends too on how your business is structured. If you just are, a solopreneur and you are working individually, then I think that probably helps to pay yourself a fixed amount that kind of when with that amount you can pay your personal bills, and the rest of it can stay in the business to help you build up those reserve accounts for that runway. If you get a little bit bigger, say maybe you have a team with you, maybe you have an LLC or an S Corp, there's going to be different rules about how you should and how you can pay yourself, whether or not you want to take a salary, or you do what's called owner's draws. That would all depend on specifically what your legal entity structure is when you get a little bit larger. But I do think that making sure that you understand what it's going to cost to run the business, and what it's going to cost to kind of run your personal household is important, so that you can manage those two things in tandem. And the other key factor that you hear a lot of people talk about is making sure that you have an emergency fund. And usually that's anywhere from 3 to 6 to 9 months of expenses saved up, whether that's for your business or for your personal. And so making sure that each month you're setting aside a little bit of money, so that you can build up to that amount, so that, if you happen to have a down month or two, you have money saved up so that you could pay your rent, your mortgage, your employees, those sorts of things.
Awesome. Well, one of the things we talk a lot about is sort of backing into your business production goals based on this knowing of the numbers. So we encourage the students to, number one, know your numbers and your lifestyle. Like, what does it cost for your housing expenses, your gas, your car, your food, your
Mhm.
adventures, your vacations, whatever. And then take that number, let's say it's $10,000 a month, or it's $5,000 a month, or it's $15,000 a month, whatever that number is, then make that be the number that you pay yourself. And then additionally, knowing your business expenses, keeping those separate, so that when you have that paycheck and you can start to build out the runway in the business account, but you're also building out the runway in your personal account, then ultimately, once you know the number, you can then back into, okay, if I want my business to be profitable in such a way that I feel confident reinvesting in my business as it grows, meaning hiring people, having systems, technology, et cetera, then I just need to know my average price point, my average commission amount, and then determine how many transactions per month is that. And interestingly enough, when you do this exercise, you might find that the number of transactions per month for you to achieve your big, hairy, audacious goals in your financial life and having all the prosperity that you desire and deserve might mean that you're doing more transactions per month than you've ever done before, which again brings us back to it might require a different set of rules and circumstances to
Mhm.
navigate and maintain that level of business without it sucking the life out of you. So it's interesting because I love these conversations because I don't know that many of us take the time to really think about it and to plan for it and to find that clarity. And once you have the clarity and then you've got the decision behind it, okay, that's how many I'm going to do. I've decided to do this amount of volume in order to be profitable, then it actually feels almost easier. Like the little bit of structure is liberating instead of the fear feeling suffocating. You know what I mean?
I think so. And I think, it just makes it that much more tangible and it's trackable. And there's a saying, and I forget where it's from, like what gets measured gets managed. And so if you know what that number is, you can make sure that you're doing everything possible to achieve that number. And if it doesn't seem like you're getting there the first month or two, you have to change your inputs to get the output that you're looking for. And so where can you look for more leads? Can you network somewhere? Can you market somewhere else? And it really sort of helps to focus your activities when you have that clarity of goals.
I love that. Awesome. Well, Cheryl, I really appreciate you coming on the show. This is a fun topic to dig our teeth into. Like I said before, we've never really gotten this granular on the show around money management. A lot of it's just like big picture, big ideas. And at the end of the day, if you're working hard and taking the risk to be self-employed and not creating a path to financial freedom, then what's the point? Because it's not like we
Mhm.
take the easy route by being entrepreneurs.
Right. Absolutely. And you're looking to build that, wealth for your family and to do the things that you want to do. And so why not be planful about that in the same way that you're planful about, planning a vacation or other big life events.
Awesome. Well, Cheryl, if folks want to get a hold of you or connect with you, follow you online, where are the best places to find you?
So my website is Pillar One CFO, and you can reach me at Cheryl at pillar1cfo.com. And you can reach me on Instagram and LinkedIn at Cheryl A. Heller.
Awesome. Well, thank you so much for taking the time to share your wisdom with us today, Cheryl.
Thanks, Erin.
I appreciate you. And as always, to all my friends out there listening, thank you so much for tuning in. If you're finding value with this content, please find a way to leave a review wherever you're consuming it on Apple or Spotify or wherever you are, because the reviews really help us attract great guests like Cheryl and help this content get found so that many of us can build the life we don't need a vacation from. I love you. I appreciate you. I'll see you next time.